given the environment we're in, dividends have been relatively resilient. It's not a great number, but as long as you've been invested globally, had some diversification, some companies have managed to weather this, and so that number isn't too bad.
Jane, I don't want to say everything's changed, but I do feel like everything's changed. And I'm not just talking about COVID, I'm talking about stakeholders rather than shareholders being one of the big ESG mantras now. So if I can get 2.07% on my S&P and 3.36% at the current levels on the FTSE, are these kind of the way it's going to be in the new normal?
Yeah, I think what's happened is that dividends in a number of areas have been reset, but at more sustainable levels, particularly, for example, in sectors such as oil and gas. There's other areas where we've seen some resilience. So pharmaceuticals, those consumer staples, those food retailers have continued to pay dividends. And so the good news is, although we've had a fall this year, is we are expecting dividend growth to resume next year.
Jane, what's interesting is the pain hasn't been shared evenly. It seems to be countries that have markets made up by a high proportion of banks and oil companies that have suffered disproportionately. And I guess that means the UK and to a certain extent Australia has also been at the back of the group. Tell us a little bit more about why these two countries have done so poorly on dividend payouts, and what you think happens once we get a vaccine that works and we get something like normal life back.
Both UK and Australia, as you quite rightly point out, their dividends are going to be down about 40% this year, so they've really struggled. Whereas in the US, Japan, we've not really seen many falls at all. The reason why UK and Australia have particularly been badly hit is that they were very high yielding markets. They were paying out a lot of profits in dividends. And as you said, they had a very high propensity towards banks. In Australia, banks accounted for over 50% of the dividends paid. In the UK, it was sort of nearer 18%, but also oil and gas. And obviously, BP and Shell, big payers in the UK market. And BP and Shell have reset their dividends. We saw that earlier this year, cutting by about 2/3. And then the banks are clearly not paying dividends at all at the moment. So those markets have been particularly badly hit. What do we think for next year, though? Well, those oil and energy dividends we don't think are going to come back. They have been reset at a lower level, but they are much more sustainable now than they were. And then for the banks, clearly it's going to be around what the regulators allow. And we're expecting some sort of discussion or some announcement on what banking dividends are going to be allowed to be paid in the next few weeks.
It's interesting. We've seen a country like China actually stipulate that businesses must start making dividend payments as they try and push their market into a more regulated condition. What do you think the outlook is from here for a country like China and its dividend payment?
China actually has seen dividends in this third quarter report we've just published increase by about 3%. So it's been relatively resilient if you think about how the UK and Australia have been impacted. It's going to be key, isn't it, what they're going to go on for in terms of economic growth into 2021. And that's really going to be what's going to underpin those dividends. I don't expect huge growth in China, but I don't expect it to get lower.